you think Mario Draghi should be pulling back on the monetary stimulus here in Europe?
Well, first because growth is already way higher than what was initially expected. That's a positive. But more importantly, the excess liquidity at the European Central Bank is almost 1.3 trillion euros. And that can generate real problems if it continues to build up. So they need to monitor that problem, because at the end of the day, if we think of the confidence in monetary policy, it has to be both on forward guidance, it has to be about whether growth is happening and employment is improving. But if excess liquidity continues to build, it proves that there is not a problem in the market. There is not a problem of credit demand, that there's not a problem of just supplying money, that there are other issues. And the issue in Europe is overcapacity. The issue in Europe remains to an economy that remains subdued, but the growth already is happening. So they need to start tapering to build up a few tools in case that in the case that the economic cycle turns.
What about populist politics? There seems to be a huge political risk still across Europe, and the Italian elections has really been cited as the next big catalyst for markets to congregate around. Isn't there a feeling that Mario Draghi needs to keep the stimulus in the system to calm a lot of investors and keep yields low to enable this recovery to continue?
Yes, but on the other hand, it's not needed because deficits are coming down. And it becomes a perverse incentive. If you keep bond yields too low, you are incentivizing the bad type of debt that ends up fueling populist messages. So in the end, what you cannot do is to implement a monetary policy when you're basically trying to address an issue that has already passed and just keep it just in case. Just in case doesn't work, because the populist message doesn't die down. And it has nothing to do with monetary policy to start with. Second, monetary policy is not the conduit of either investment or employment. It's been the addressing of overcapacity. That already happened between 2011 and 2012. So what they need to do is to pay attention to precisely not giving the idea and fueling the message that populists give that what they're doing is giving money for banks.
Can I ask you very quickly about interest rate differentials? Because it feels as though that has been in the price around dollar, for instance, but if there's some movement on euro, will that make a difference?
Well, I think that first, I think that the euro needs. I think the euro is too strong first, and the euro has strengthened on the basis of a perception of let's say improvement after the elections in France that has very little to do with fundamentals and a lot to do with politics. So it's more a relief rally. So I think that will also let's say change a little bit in the next months. So I think that the differentials will also start to be a little bit more based on the fundamentals, and the fundamentals of the economies. The French economy is improving a little bit, and peripherals are doing a little bit better, and all of that you need to really put a brake on the risk of creating another problem like you did in 2007.
Dan, thank you so much. Daniel Lacalle from Tresses Gestion joining us here on location near the Houses of Parliament. We are going to take a quick break here on Squawk Box, but we'll be right back with plenty on all the market moves across the European markets.